Morning, Top Gun here, Wednesday, March 3rd, 3:15 a.m. Pacific Standard Time. This is the YouTube pre-market commentary. Okay, section 1, indigestion day. After the close yesterday, short-term trading wizard Scott Redler put up a tweet with his thoughts on the S&P, and he said, look, this has been a really tricky tape since the February 16th high, so the last 10 trading sessions. If you're struggling, you're not alone, and we gotta be nimble out there. Essentially, that's a inference from what he's saying, but a lot of traders being whipsawed right now. Okay, what Scott did say was, let's see if yesterday's low of 38.68 holds. Now, 38.68 is just below 38.70. The S&P and all the major indexes experienced a nasty sell-off in the last 50 minutes, which turned a routine digestive sort of day into a kind of indigestion day. Little stomach upset for the bulls the last 50 minutes. But the futures, the S&P futures are up about 0.55%, and the NASDAQ futures 0.65%. I just checked, so it's looking like that will hold, but there's a long way to go. So yesterday the S&P ended down 0.81%, the NASDAQ 1.69%, and the Russell 1.93%. And this did some technical damage as the NASDAQ closed just 25 points above its 50-day moving average, so right on that 50-day moving average, and the S&P closed below its 21-day moving average. So there was some technical damage done. It can be undone by a bounce today, but it is worth pointing that out. Okay, next let's talk about Target earnings. Target reported a blowout fourth quarter. Comps were up 20.5% and adjusted EPS 58% to 267. However, and you can see this in the graphics included in the blog from their earnings release. However, the stock sold off 6.77% on more than 6 times average volume. And as a result, Target closed well below its 50-day moving average and is now in technical no man's land. So what gives? I don't know. I don't know why it sold off so hard, but it did. Valuation is not a huge problem at Target. I think what's going on is they didn't give guidance, and investors are concerned about what their business is going to look like in a post-pandemic world when other small businesses that have been forced to close are now, and that compete with them, are allowed to open, what that's going to mean for them for 2021 and the tough comps that they face. Okay, lastly, I want to talk about the gold miners. So the gold miners hit support on Monday. The GDX did, the main gold miners ETF. And now, obviously, this is really important to Top Gun. As you can see, I included a tweet where I bumped up our GDX and GDXJ positions from about 30% to about 50% on Friday into some serious weakness on that day. And so it found support. You can see that in the chart from Shane Murphy. And they bounced really hard yesterday with the GDX up 3.43% and the GDXJ up 3.51%. Yes. Okay. So it's been a tough 7 months for gold investors as gold hit a peak on August 5th at about 2,050, and it's currently trading in the 1720s. So it's about a 16% drop over that time period. Investors have been turning to Bitcoin as a hedge against fiat currency devaluation. Instead of historically, they've turned to gold. However, gold is the proven store of value in the event of inflation, which we're now seeing due to the Fed's actions in rising interest rates and rising commodity prices. So I personally like the precious metals, gold, silver, and especially the miners, which are leveraged to the metal. All right, I'll see you guys tomorrow.